about some signals of recessionary economies and some trending. Obviously, the R word has been thrown around a lot lately. Okay. And it would be totally normal for everybody to get caught up and go, whoa, 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 I'm scared, I'm concerned. And there's been a lot of volatility in the market. For a reminder, we did a show on the VIX. VIX is the volatility index. And as a reminder, we talked a lot about Robert Shiller's narrative economics and how narratives can impact a lot of what people think. But is there data right now to support the suggestion that a recession might be looming?
Okay.
There's certainly an uptick in conversation. There's certainly an uptick in fear. But I really want to get down to the brass tacks, the granularity of, is this really a pressing immediate concern, or is this more like a couple of years out?
Okay.
So Davos Research, another X page that I follow, this particular signal has flashed only 2 times since 1960. Both times stock rose, didn't go down, rose by 20% first, then crashed. And a crash, for reminder, is any adjustment in valuation 20% or more.
Right.
So things are about to get absolutely crazy, and they have here's a thread here. But are they really, though?
That's the question. Are we experiencing a correction right now, or are we experiencing what could be the beginning of some dark times?
So let's set the stage, okay? The tech sector, particularly the Mag 7, has been getting a little banged up in the ding-ding from the short sellers, okay? So we've seen a little bit of those large brand name companies coming down in valuation because short sellers are trading them down. And you know what? Sometimes this happens. I'm not going to give you any real big reason or manifestation as to why. Just sometimes people short sell stuff down because they think the market's going to go down.
Okay.
A lot of people jump on a narrative and the short sellers all come in and they short sell the stuff and it drags value down a little bit.
Right.
Sometimes it's just as simple as that, you know? But the real question is does this really mean that the market is going to have a huge impact? Well, this is the U.S. Federal Reserve's recession probability model. I'm going to put it in between us here, casually between you and I. That was great sound effects.
Yeah.
I don't even know why I put them post-production. I just rely on you to do them. Which estimates the chances of a recession occurring within the next 12 months. And it has just fallen significantly, similar to only 11 times since 1960. So, to be clear, the probability of recession has not gone up. It has gone down by this metric, the U.S. Federal Reserve's recession probability metric. Now, that is calculated from the yield curve, and we've seen the yield curve come down recently, and it's stabilized a little bit, and with that, mortgage rates came down. Hold on tight, all you realtors out there. We're going to have a whole segment on the mortgage industry coming up. So if the probability of recession's gone down, why are we hearing so much talk about a recession being looming, right? It's counterintuitive.
Right.
Right?
Yep.
Saied, you're really attractive for an ugly man.
Wait, what?
What? That's kind of what we're saying in the media.
Thank you, I think.
Yeah.
Yeah.
That's tantamount to what happened at the gym today, by the way. Just,
Oh.
It's.
Oh.
Can we get out of the way now?
No, that's a little foreshadowing.
It's-
No. Save it.
It was, the conversation was okay until the end. And then I was like, wait,
You're not.
what's this?
You're in shape. You're pretty in shape for a not in shape guy.
Yeah.
Oh.
Yeah. A lot of that. And worse.
Yeah.
So 11 times since 1960, we've seen the probability of recession fall off as dramatically as we're seeing it currently now. So it's gone down very fast. The probability has gone down almost instantly. I mean, it's straight down. You might be wondering why this model shows recession probability is declining today, right? Reasonable question. Despite widespread fears of a downturn driven by Donald Trump's tariff policies and one of the most aggressive stock market drops in 3 years, you saw a full week and a half of the stock market going pew, pew, pew. Give me your sound effects.
Pew pew.
So I mean, there was a lot of headlines.
Right, but why do you think that was? I mean, we know that in the past week to 2 weeks, right? We know that there was conversations around tariff retaliation. Well, there was tariffs.
Yeah.
And then the retaliation with tariffs.
Uncertainty, fear causes people to pull back and go, whoa. I'm going to wait and see.
Yeah, and then you did have some correction in the stock market, right? Because of those tariffs in the beginning. And then you had Trump come out and say that, I'm not going to rule out the chances of a recession.
Yeah.
And then when you have JP from the hood, Jerome Powell come out and basically say, we don't really know how Trump's policies are really going to affect anything. We're going to be data dependent. We're going to wait and see. We actually feel like we're in a good place right now. Then I think that causes more uncertainty, which causes more volatility, right? Because nobody in the stock market likes that, right? Uncertainty, right? So that, I think, is a big reason why we've been seeing what we've